methodological changes made the January non-farm payrolls figure complicated. So, January's non-farm payroll was a whipsaw figure for market watchers. The headline number came in at 130,000. That is the strongest growth in more than a year and more than double the 55,000 that Dow Jones had predicted. But job creation for last year was revised dramatically lower to just over 15,000 per month, with the last 6 months of the year, producing a net loss of 1,000 jobs. Now, the two-year Treasury yield posted its biggest one-day gain since late October on the back of the news. But as I say, there were methodological changes that made it more complicated. Meanwhile, the unemployment rate dipped to 4.3% against expectations. It would hold at 4.4%, potentially shifting focus back to the inflation aspect of the Fed's mandates. I got methodological, I couldn't do expectations. Anyway, expectations for a rate cut at the central bank's next meeting slumped on the back of the data, according to the CME's Fed Watch tool, which now prices in a 1 in 20 chance of a rate reduction versus a 1 in 5 chance on Wednesday. We've spoken to investors and economists about the outlook for the Fed from here.
Our forecast, we don't get any cuts until the middle of the year, but then we have 50 basis points as inflation starts to come down more clearly when we lap the tariff effects in April, May, June. Then in the back half of the year, we think inflation is going to come down, and that will create room for sort of benign cuts back down to the 3% estimate of the neutral rate.
Yeah. So I can just share my screen real quick to kind of show real quick to see. Give me 1 second.
Add to the stage.
There it is.
All right. There we go.
Yeah. All right. So here's the S&P 500. So the S&P 500, I believe, is like the top 500 companies that are, I believe that's what it is. Don't give me a line. I know the S&P 500 is.
You're right.
It's one of the.
Yeah. You're right.
Okay.
It is that.
Okay, cool. It's the top. Hold on, let me plug this. So it's the top 500 companies that are out there that are, that typically doing that are pretty much keeping up the market. And 1 second, let me plug my computer in, my laptop. Cool. All right, so it's the top 5. So now, top 500 companies. So let me just kind of give you a brief. So you mentioned like the CPI and the PPI, CPI and the non-farm payroll and all that. And so I want to bring something so you can understand how that affects the market. So that, I believe that news happened around 2:30 p.m. Yeah, it happened around 2:30 p.m. And I marked it right around this area right here. I marked it, as you can see, this is the yellow line. It happened around 2:30. That's on a Friday. Thursday, the same thing, 2:30 on this day right here. And then I'm going to go back as well to kind of show 2:30 right here. So this, one of the tools that we were using that we talked about earlier was TradingView, and this TradingView is what we use to analyze the data that comes through the market, right? Or analyze the data that I could say it's a visual of what price is actually doing, right? So. If you really want to know more about like an introduction to TradingView and charting and stuff like that, just go ahead and join the Discord. And what we'll do is you can just set like a one-on-one with me, and we can kind of go from there to give you like a basic understanding of that. But anyway, one of the things I wanted to kind of bring out is the fact that around 2:30, this is when data came out, and as you can see, since 2:30, the market pretty much took a dive a little bit, right? But specifically around 2:30, around this time, this is a specific time where the market does a move, whether it's up or down, and that's based upon a specific strategy that I use, which is a end of day quarterly theory. And so I'm going to talk further about that, at some other time. But basically, at 2:30, that's a specific time that the market typically makes a move, right? So within a daily, within a session, you have 4 quarters: quarter 1, quarter 2, quarter 3, and quarter 4, right? Quarter 3, which is this area around this time, just so happened to make this move. So around every quarter, there's always a move, right?
And that's a dip to the downside. And those,
right, that's a dip to the
downside. Yeah, and for the audience, each of those bars or lines, or what they call them, candles, represent what? Is that a day?
So
is that a
each candle represents on this what? Specifically for this, this is the 5-minute chart, 5-minute time frame.
So each right? candle represents 5 minutes. Okay.
Yep, 5 minutes of data. Correct. Yep. Gotcha. Now, specifically, I have it notate here at 2:30 because around 2:30 the market makes a specific move for the New York PM, and again, it does it all throughout the day, but specifically I was highlighting around 2:30 because this is when the news came out, right? This is when this specific news came out. Here it is, the morning, the New York Open. This is another quarter theory where between 9 and 10, it does a move, which is, in this case, you can see it happened, but I'm not focused on that right now. I'm just focusing strictly when the news came out around 2:30. So this is that.
That's the CPI. That's the CPI news.
Right, CPI news. Yep. Now, here's another one I drew out. This really didn't do too much on this day, and on this day. So on Tuesday, I believe it was this really didn't do much at all. But typically, when the market first opens, between 9 a.m. to 10 a.m., you're going to see a big move, and this is exactly what you see. Between 9 and 10, and you can see 9 and 10. That's typically moves the market. Again, this is a morning New York. This is when the market first opens up. You can see this drop to the downside, and here's another one right here. 9, 10 o'clock. It just makes a big move to the downside. Again, that's a strategy for another day. But specifically, again, I just want to emphasize that specifically working on the 2:30 when the news came out for that CPI or PPI data and those unemployment claim numbers and stuff like that. And as you can see, it dropped down. Specifically, I called into a Discord that we were gonna short, and I literally shorted right here. This is my golden zone area. Literally, this is actually perfect. Like this golden zone area right here, my golden zone is 79%, and it dropped literally right at the 2:30, right when the news was going to come out. And again, this just so happened to be the Q3 quarterly area where the market dropped. So basically, how I got this specific move to the downside. So in Discord, I said, "Hey, I'm about to go short," and this literally was a end of day. We call this an end of day dump, right? So this end of day dump happened around 2:30. I said, "Hey, I'm going to short and my target was actually." My target actually went lower than what I thought, but my target was, I think it was 68.30. That's what it was. It was 68.30. That was my specific area where I thought that the market was going to go down. And this contract since it was this end of day and it was the same day, end of day, it actually ended up going the contract was like $340 each, and because it was so cheap, it actually ended up going lower, and that contract ended up closing, I believe, over $3,000.
That's insane.
Yeah, $3,000.
That's insane. And so
basically, in other words, you could have, put $360 into something, and then about what? How many minutes later? Let me just
those
see.
are 5-minute candles. Those are all
5-minute candles. So from here,
that looked like it was probably what, an hour? Is that an hour? Time frame? 5, 10, 15. Yeah, if you count those.
So I was saying an hour. So within
an hour. Yeah. So within an hour.
Yeah. So that's about an hour.
Yeah.
Yeah. So within an hour, you could have made about close to $3,000 in profit. You mentioned the Russell earlier. So the S&P 500, as we saw, that it went to the downside. But in this case, the Russell actually went up to the. It was going up to the upside and the downside. So initially, the Russell on this day. Now, from my experience, the Russell seems to be a little bit more sensitive to unemployment data, if that makes sense. So unemployment data, FOMC, anything related to unemployment, whatever, and banking and all that. For some reason, the Russell seems to respond to that more heavily than the S&P 500 and the NASDAQ. And the reason why I believe that is because
yep.
So the reason why I think that's the case is because the Russell is, I believe it's the index futures, Russell 2000 index futures, and a lot of banks and small cap companies basically are pretty much run the Russell. So when you notice that if the Russell is up, what's IWM and stuff like that, a lot of small cap stocks are going up, right? And I believe that's because the amount of money that's being put into those companies are funded, like it's something related to banks. I don't know, I could be wrong, but I believe that it's just something related to banking.
I'm going to give the audience actually what the Russell is.
In this case with the Russell, and I'm going to I'm not really going to go into any more in depth about this, but there's I would say one way that I specifically like to look at the market. I mentioned quarterly, timing and stuff like that, quarterly theory, but the main thing that I focus on is accumulation, manipulation, and distribution, right? That is how I look at the markets. I don't care if it's Forex, crypto, whatever, right? So you have an accumulation phase, which is Q1, right? Accumulation, and accumulation basically is when price action is moving sideways. We call it sideways consolidation, or within a specific range, right? So this range is accumulating. It's not doing anything. It's just not moving. It's not going high. It's not going low. It's just staying right in one area. And what that's doing is it's actually built sponge. It's grabbing, soaking up water. It's soaking up orders for it to burst out. And this is exactly what happened on Thursday. Mind you, there was news that did come out, or news that they're anticipating to come out. And so, as I said earlier, if I see the market is ranging, at some point it's going to just burst out, right? And so in this case with the Russell, see like on Thursday that it was just an accumulation phase, which is, again, like I said, it's the range. So accumulation, you have manipulation. So if you have to keep in mind that when it comes to trading, we're not the only ones that's actually behind the desk trading. There are people, hedge funds, institutions, and bankers. They have to meet a specific quota, so they manipulate the market into so much to where they are trying to make you think that the market is going to go a certain way when it doesn't. So when you see these accumulation phases, people who are trying to go short They think that, okay, since this is short,
all they're
short.
doing is pretty much trying to wash out the small fry, the people that got a little bit of $100 in there.
Right.
They're trying to just wipe them out, liquidate them before they actually make the move where all the big investors are already lined up for to profit from. And I have a quick definition of what the Russell is. The Russell's U.S. indices, from the mega cap to micro cap, serve as the leading benchmark for institutional investors. So you are correct. Institutional investors are lined up with the Russells. It is a modular index construction that allows investors to track current and historical market performance by specifying market segments: large, mid, small, or micro cap. You were correct on that one.
Yeah. Okay. Cool. So in this case, I see that there's an accumulation. So I have this little indicator where they marked it out for me, but this is the high and low of it. If we swept that, then we're like, okay, boom. People think we're gonna go lower, but we're not. It's just manipulating. So you're accumulating, then you're manipulating, and then the distribution, which is always at New York AM between 9 and 11. And as you can see, between 9 and 10, 9 o'clock right here, and 10 o'clock right here. And also I'm going to add one more other thing. It's called here it is, right? Yep. Okay. I'm going to add this 12 a.m. New York Open. So I'm going to just give a free gem, some I would say free game for you traders that are already trading, right? If you're already trading, right, this is going to change your life dramatically, right? So I have many other gems that I'm going to give out, but this one specifically, I know you're going to like it, especially if you're already an advanced trader. So I mentioned accumulation and distribution. New York Open, right, which is between the opening candle right here, 9:30. This 12 o'clock a.m., we call this the New York Open, the true New York daily open, which is 12 a.m. open. At between 9 a.m., 9 and 10 o'clock, if price is above this 12 a.m. open, if price is above it, we're either going to do what? One or two things. We're either going to go down and tap this as a magnet and go further down, or we're going to go ahead and tap it and then continue up. So before New York Open, around 9:30, which is right here, 9:30 opening right here, anticipate a drop to here. At least so if you want to go ahead and get into a mini micro contract, hit a sell limit, boom, there it is, there you go. And then as you can see, it tapped it right here and it just took off. Right, so that's a gem. I'm gonna give you one other example of that happening.
One more.
As
This
well.
is it, y'all. One more from the professor. There, y'all.
Yeah,
we're gonna have y'all go to the Discord. Join them there.
And then, as you see, I said this: if price is above the 12 a.m. open, we're gonna tap it or go lower. As you can see, this is a 12 a.m. open. This is the New York Open around 9:30. 9:30 right here. Price came up. So if you see that, this is the manipulation. You have to manipulate it to go up. You have to go up to go down, if that makes sense. Because remember, you have to look at it from a banking and institutional standpoint. So accumulation, we manipulate it. And then we distribute it, meaning it's going to keep going up higher. It has to go up to go down. So when I see prices above here, I'm like, okay, yeah, we're bearish. As soon as the market opens up, I'm like, okay, we're going down. Without really, before it happens. So if you see that, you can put your fib tool, as we said. If you want to know more about that, please, DM me with those questions about that. So I'll go from the swing high.
Just subscribe to the channel. Subscribe to the channel. Y'all can get everything.
Low right there. And then this is I have a sell limit at the 79%. And as you can see, what happened? It just flew past it and just went down. We passed this area and just went down. Specifically, I know someone who made thousands of dollars. When I say thousands, I'm talking about life changing. Like they literally turned like $20 into over $2,000 to $3,000.
Yeah.
Just off of this move right here.
Oh yeah.
Off of this move right here. So that's all we're going to talk about today. I have multiple gems, multiple different different strategies. You have open range strategies. I have swing straight trade strategies. Oh, and also want to talk about, I'm not going to really talk about, but also want to kind of mention is, we mentioned brokers earlier, proprietary prop firms. You can use prop firms to your advantage, so you don't necessarily have to use.
Are they still around? Prop firms are still a thing.
Yeah, you have. I thought the
CFTC stepped in and
got rid of them.
And
they got rid of the non-regulated brokers. The non-US regulated brokers, they got rid of them. However, they have FTMO, which you can actually get an FTMO for Forex here in the US, and it's perfectly regulated now. And also, what everyone is starting to do now is futures prop firms. So you have Top Step, you have Take Profit Trader, you have Lucid. These prop firms, people are making money, and you can also just 5 or 10 of them at a time, copy trade them, and make $500 each account across 5 or 10 accounts, and you just do the math. So subscribe, to Up For Financial Tech Talk. We have the Discord in the description. I have a free Discord. I also have a paid Discord. Paid Discord is a little bit more in depth. It comes with 101s. It comes with my secret little strategies that I have. But the free Discord is just kind of like I'm just calling out plays here and there and just kind of interacting when we can. So we highly recommend for you to do that. So that's all I'm gonna talk about today. Let me kind of get back on the screen here.
Listen, if that wasn't enough, that was enough. I think my audience head is spinning right now, but let me tell you, it's very educational. It's very technical what you're doing. It's another avenue of taking advantage of the market, taking advantage of this the so-called tariffs, the inflation stuff. You know what I'm saying?
Mm-hmm.
People out here struggling, living from paycheck to paycheck. But if you are in a position to educate yourself, just sit back and listen to a course, or sit back and listen to the professor. He can, kind of get you in the right direction to the part where you can have your skill set up. And then what he's saying is there's paper trading that you can do to help you build confidence. And then when you're ready financially to pull that trigger and you understand the market and how it moves and how you can take advantage of the market, hey, that's when you win. So, but at the end of the day, man, listen, the professor, it's been real. I know we didn't talk about the quarterly theory. I don't know if you want to hit on that real quick.
I kind of mentioned it already. I kind of mentioned the timing about it, but as far as we could save that to the next time because that's a little bit more in depth. But it's basically time and price. It's based off of what we went over earlier: the accumulation, manipulation, and distribution, and continuation. But within that, that's kind of like the shell or the basis of quarterly theory. So keeping that in mind, Q1 accumulation, Q2 is manipulation, Q3 is distribution, and Q4 is continuation or reversal. So with that Q1s through Q4, you can actually utilize that throughout the day, throughout the week, and throughout the New York, Asian, or London sessions. So that's all. And it's just, yeah, that's it. That's all. It's kind of in depth.
But that's why I wanted to bring you on Financial Tech Talks, so people can know where to find you and where they can actually, take advantage of somebody like you and kind of get them in the right direction to bring them to a spot where they can walk with a little bit more pride and not have to worry about if they're gonna get fired the next day or whatever. They have a skill set, and because that's really exactly what it is. It's not a gambling. The disclosure is this is not financial advice. Do your own research behind it. But at the end of the day, this stuff is real. It is life changing. But you need to be behind a mentor in order for you to actually make those right steps and not go through the same hurdles that Jerome went through and myself at some point, when it comes down to these markets, because for real, they can be a little bit vicious. So just keep that in the back of your mind. But other than that, though, do you have any other shout outs or anything like that before we roll on out?
Man, big shout outs to you, man. I mean, we were business partners in the past, man, but you're a good friend. I always said you're like another brother. Like you're like a brother from another mother.
I appreciate that, bro. Yes, sir.
Yeah,
yes, sir.
and
likewise.
I'm gonna also shout out my boy Stacks. He has his community. It's called Trade Different. I can go ahead and add his Discord, not his information on there as well. That's my brother right there. He's been, really been a good friend for me, and like I said, he's a good teacher as well. He's been in it for about 20 plus years, so he's a little bit more familiar with different the market within using paradigms and different measurements and stuff and shapes and stuff. I'm more of a technical. I like to look at it from a time and price point of view. But anyways, shout out to Stacks, and I think that's about it. I'll go ahead and include him. Let me see. I really can't think of anyone else right now. Like I said, thanks to you and my brother Tony, man.
Yeah, Tony Porter.
Man, another good brother, man. Like we took
Tony
pictures.
Porter.
Yeah, all of it. We all took company pictures, man. And man, Tony was just cool, man. He's a good brother, man. He's
all the time.
He's in it for the culture, man. He wants to set a good example, for a lot of brothers that's out there. Like you said, I think he has an Airbnb business. Him and his wife, man. And
check out their episode. Check out our latest episode. He goes into depth about the Airbnb business and his hurdles when it came down to obtaining his first Airbnb to the point where he has several and it's lucrative, man. So shout out to Tony. I appreciate you, Jerome. I want to give a big shout out to the Hustle Society Trap Podcast, Myron Dorsey. I appreciate you, cuzzo. You make everything possible. Appreciate the whole team. Pookie over there at Digital Trap House Productions. Hey, Tony Porter, LLC. Jerome in the house, man. We over here, and also Sports Lounge 757. We doing it all, man. This is the year here. We just getting started. Other than that, though, man, listen. Appreciate everything. Y'all get in the comments. Like this video, and we're gonna talk to y'all later. All right? Peace.
Appreciate you, bro.